Obviously I didn't take it. This was my plan, but I just didn't have the time to kind of look at the charts to kind of enter. Um, so for example, obviously off the weekly when we already had the plans, or if you check the Discord, uh, you saw the image where I was kind of waiting for it to pull back because we are tapping into this daily, series of order block. So change to delivery, which is inside a daily for value gap, and if you draw, premium to discount, like it's in discounted range, and we take out this low as well. So obviously, then that's why I want to kind of be buys, and on top of that, we had this new daily opening gap, which we kind of left unfilled during the early weeks. So that is why this Thursday candle is a valid order block for me. Even though we don't have a change of state delivery, this level right here is a valid order block that I wanted to use to kind of look for an entry, right? So this happened on Friday, where Friday kind of reversed. So no trades there. Even after when we rejected off of this candle, it wasn't kind of enough to kind of enter. But when the week opened on Monday, where we leave these equal highs and kind of sweep the lows of the weekly open and then kind of push higher, we'll kind of look at what the entry looks like on Tuesday, which is a classic expansion week, as you know, for the weekly profile. So you have Tuesday low of the week. And if you look at silver, let it load, it's the same. So if we look at, so here was the low. So for example, silver is kind of more cleaner in the terms of it took out this low and easily reversed, while gold didn't kind of take out any low. Like the closest low was this low or this low. So this is a lot more deeper retracement. But when you see silver kind of reversing off of a key level, then you will know kind of gold will follow in the same process. And yeah, you can see also here very deep retracement on Tuesday, while gold does a shallow retracement, and I think it leaves SMT. Yeah, and you have a clear SMT. So let's look at how the trade I would have taken it on Tuesday. So let's say now we have a clear bullish bias. We have SMTs at the lows on the 4-hour candle, which is kind of reversal candles. So let's kind of draw this SMT, but we're going to kind of go for gold because it's a stronger pair. Why? Because on these are the same hourly candles, the 4-hour candles. So the silver, the 8 a.m. candle gets swept, while on gold it doesn't get swept. So let's look at Tuesday, right? We have our targets, which is this external high, and the daily gap, which is the final target. So you got to partial here and then hold the rest. Up to you. So let's see, this is the daily open. So these are key levels I'll mark out right away. So you have here is the daily open. Let's mark that out. Daily open. And if you are bullish, if a price pulls, retraces or starts with a, like manipulation downwards, it's usually beneficial for us because we want to be into buys. So we kind of want to see it manipulate first. So we have an SMT there, and then we take out this low on Monday, making a low of the week on Tuesday. So that's the most important part. So now we have a 4-hour, and this is during, so we have a Asia kind of reversal, but the real expansion starts during London. And you get a 4-hour closure above the daily open. So on the 4-hour alone, if I just see this, I would expect the next candle or the next few candles to kind of expand, so it didn't retrace on the 4-hour, but I expect it to expand. So since I'm on the 4-hour, I'm going to go to the 15-minute. You could also, for example, I start liking to use the 30-minute to 3-minute if the 15-minute doesn't look clean, for example. And we kind of also want to mark out where the new the new 4-hour candle opens. So we had this 8 to 12. So from 12 o'clock is the new 4-hour candle open. So we'll mark that out as well. You also want to see manipulation kind of under it. So let's mark that. For our open. Okay, important level. And so you can see actually on the 50-minute alone, when the 4-hour candle open, we don't tap into any key levels. No fair value gap, no order blocks, nothing. So my guess is that silver kind of did that, right? That's what we want to kind of expect. So let's have a quick look where the candle opens. I mean, so here even doesn't do anything. So in terms of that, in that case, it isn't clean in terms of an additional entry. So we have right here the SMT. So this is now during London session. We get the London SMT and a 50-minute change of state delivery during London session. So here's your first 50-minute change of state delivery. And we're kind of expecting this 4-hour candle to kind of reverse, right? Only because we swept out a key level, we had an SMT at a key time, and you have an expansion above a, showing kind of change of delivery at a key time. So yeah, like I said, it's 9 o'clock. This is kind of in the kill zone of London. You get this change of state delivery. Do not forget the 4-hour candle opened at 8 o'clock. From 8 to 12 is a 4-hour candle open. So you can see how it opens, manipulates while silver takes the low. And then you can expect it that you think the low is in for the day. We don't know, but we're playing probabilities and we think the low is in. So this is the change of state delivery. So what I would want to see is, after you get a closure above, personally, since this is kind of be a big swing trade, you can just enter right here, like at the top of the 50-minute fair value gap. You stop loss at this SMT low, and your first partial right at the ERL, which would be a 2.5R. I mean, let's also draw the standard deviation. So negative 2.5, I mean, it's not even close. And then kind of rejects but still holds the 4-hour open. Anyways, so the partial would have been, the ERL. Yeah, and the rest, I mean, you can see even for this 15 minutes change the delivery thing, it doesn't even, it goes a lot further than that, right? The target would have been new daily opening gap, the start of it at least. So 5.5R if I were just to look at this alone, right? And let me see if the 30-minute 3-minute kind of gave something better. So see why I kind of like the 30-minute more sometimes, because look at this. You have a 30-minute change of state delivery at this candle. This candle right here provides a change of state delivery. So you can even enter off of, only looking at the 30-minute off of this candle closure. And you'd have your stop right here. And again, same targets. So you can see how the entry would have been better, right, in that scenario. Let's look, for example, on the 3-minute. Once we get that closure, right? If I wasn't, when you have such swing targets, there's no point of kind of going to the lower time frame, in my opinion. However, if you want to kind of get into scalps or intraday trades where you want to have a tighter stop loss, the lower time frame is necessary, and the time frame alignments, obviously from the course itself. So see, for example, when you get this 30-minute closure, which happens here at 9:30, right? 9:30 is the closure. So let's have a look right here. 9:30 is the closure, and then you get this pump up. I mean, you would then enter on this pump, stop loss at these lows because it tapped into a fair value gap, etc. And then, for example, here as well, since that 50-minute fair value gap, you get again a liquidity sweep, which is the classic model liquidity sweep right here. And then you get a break of a change state delivery right here. Sorry, wrong candle. Right here. So then here's your change of state delivery level. And then you can just, for example, market enter again because you get a closure above it. And for example, if you were kind of looking into kind of day trade or take, tighter stops, this right here, where you have a stop loss below that low, because we're still also during London, so we can enter, and then you can target the ERL or actually use the standard deviation you started with to kind of take your profit, So that's why, for example, when you have your higher time frame bias, even the intraday trades with the direction of the higher time frame bias is a lot more easier to trade with, and you usually kind of catch expansions anyways like that. Okay, so that's why I kind of also have, for example, you kind of want to have two separate accounts. You know, one where you kind of just focus the swing trades. You don't kind of go into the hassle with the short-term time frame. And these type of things are for your day trades, right? You know, you can have a tighter invalidation. You know, more, for example, RR in the trades. You know, past your challenges or whatever. You know, for I know futures, it's probably definitely better to day trade because you can't open trades. You can't leave trades open overnight to the next day, for example. So yeah, so having two separate accounts and two different thinking in terms of the trade itself, right? You know, you don't want to kind of get stopped out for no reason in terms of these things. So always have two separate things. And since this was a 50-minute for value gap, you can see I still use a 3 minutes because so 3 minutes is really nice. You can use it also with a 15-minute. But in general, so let's say we use the 1 minute time frame because 15-minute goes to the 1 minute. Let's give it a second and go here. I mean, you can see, for example, on the 1 minute, you get your same sweep that looks like it. And yeah, you get your changes to delivery, kind of the same thing, and you would enter again. It's the same. It would have been the same outcome, right? So that's the classic setup that I like. You know, you have your higher time frame bias, higher time frame narrative. You get your confirmation or confirmation of a swing low via SMT, via the 4-hour candle openings, via the day. This happens, you know. This all comes together, and once you kind of piece the puzzles together in terms of those higher time frame bias, and you know how your entry model should look like, you know that it's fractal, then the trading itself should be really, you know, straightforward and easy. And you know, for example, if this went down and took my stop loss, I would accept it because it has every A plus A key level, you know, checklist that you could be looking for, right? Your key level, your SMT, your change of state delivery, you know, even for example, an inverse for value gap, right? You get it for fair value gap, a breaker, you get a retest into it, you know, you get a reaction off of it. During the kill zone timing, you enter off of it, you have your targets, which, you know, swing highs, standard deviation levels, you know, opening gaps. This is exactly what you want to kind of, you know, achieve, right? You want to be able to spot these things and then execute off of your plan off of it. So that's the gold trade. I wanted to really talk about it because it's a shame that I missed it and didn't share it either because I didn't trade it, nor because I missed it, like I said. But it's important to review it because, you know, if you saw in the chart analysis section, I was expecting it, you know, to kind of retrace. So tap the golden zone and plan off of it because it showed a reaction off of it, which is what I was looking for. So yeah, I think we'll go maybe do more videos on 4-hour candle openings and how to use them more. I don't think, because it's something I probably haven't spoke much into the course itself. I'll probably do some additions into it, more about SMTs and yeah, more about the daily sessions, I guess. But yeah, this is a clean trade. I'm gonna go over the Nasdaq that happened today. Again, very tough. But when you look over it, it definitely looks clean. And again, I wasn't kind of in my office to kind of trade it today.